You got the keys. You're ready to go. Wait, do you have insurance? What is insurance? Today we're going to go over the best insurance tips and overall coverages that you need to know. This is the 101, the Bible of insurance. Hey guys, this is Mark Flockhart with Think Insurance. If you're new to this channel, welcome. Don't forget to subscribe if you get value out of this. Also, you may have heard this line before. If you go back about 4 or 5 years, I actually made a video called Insurance 101, and that actually still holds true. So if you get time, go back and watch it. But it's about 22 minutes long. And I thought I'd make a faster version because over the past decade, I've learned some new ways to explain insurance that makes it a lot more simple. Now, keep in mind the disclosure is the same, so I don't know exactly what state you're in, whether you're in New York versus Michigan versus Florida, and we may talk about those throughout this video, but there's unique things about each state, but this is kind of the generalized version and way of how insurance works. At the end of the video, I'm actually going to go ahead and show you some examples and some recommendations of some things that I would lean towards in other videos that you should look into that will give you some more advice going forward. That being said, the essential reason that you buy insurance is to protect yourself. You have assets to protect or future income to protect. So the biggest way to understand that what you're trying to do is you're trying to make sure that your insurance company has more money than you. And so if your income is here and you own your home, you own your assets, whatever the case is, your level is here. You want to have your insurance company just a little bit richer than you are financially. So that way, if something does happen and they're going to sue somebody, they don't sue you, they sue your insurance company instead. So I hope you've got a pen and paper. We're going to dive in. There are 3 primary pieces to insurance. You've got coverage for others, coverage for you, and coverage for your vehicle. The first part, coverage for others. You've got bodily injury. That's the amount that your insurance will pay for medical if you injure somebody else in an accident. So if your car hits somebody else's, they go to the doctor or hospital, whatever limit you pick is how much they're going to cover. They do it in one of 2 ways. They do a per person and a per accident. So it's called 10/20 or 100/300. I commonly do the 250/500. What that means is that $250,000 will cover that person's medical if you injure them up to $250,000 per person. Now, if there's multiple people in the car, let's say there was 3 people in the car, a driver, a passenger, and someone in the back, and they all were injured. As long as you don't go above $250,000, they're covered under your policy for that accident. Keep in mind, you have the $500,000 per accident total aggregate limit. And that means that if these 3 people, even though they're under that $250,000, if any of them all together collectively are over $500,000, it cuts off there as well. So this person could have $100,000, this person could have $200,000, and this person could also have $300,000. So the 1 plus the 2 is $300,000, plus 3 is $600,000. They're all individually covered except for this person is cut off for that per person by $50,000. But on top of it, you've gone over the total limit of $500,000. I know it's a little bit in depth, but that's the easiest way to remember it. If we go back a little bit easier coverages, let's just pick a basic coverage like 10/20. That's a common one for Florida if you want state minimums. So it's $10,000 per person, $20,000 per accident. If there was 3 people in the car and they all had $10,000 worth of medical, covered, 10, 10, 10. You didn't max out the per person, but the per accident you did max out. So that $20,000 will be $10,000 short, and you have to out-pocket that. Or if you don't have the money, they're going to have to sue you some sort of way to recoup that income or that loss that they sustained. And if you don't have the money today, they can take potential future income. The second part for coverage for others is property damage. And that's essentially the same thing, but for someone's car. If you damage their car, their property, then that's going to cover that. If you hit a house, if you hit their garage, if you hit their vehicle, whatever property that you damage, you're going to pick a limit. So a common one that a lot of people start with is what we call 25, 50, 25. That's $25,000 per person, $50,000 per accident, that's the medical for others, and $25,000 is that property damage for their vehicle. And that's really the basis of where people start. You can go lower in some states. It's not recommended because it really isn't a benefit to anybody. But that's coverage for others. So that doesn't actually cover anyone in your car. That's just the bodily injury for other people that you hurt. Well, what about the people in my car? Well, you can pick up a couple things. There's something called medical payments, med pay, and that's coverage for anybody in your car. It's per person. So if you have 4 people in the car, each person gets that coverage. The most common that I see people choose is $10,000. You can go higher or lower or sometimes completely remove it, but it's $10,000 per person. So you've got $40,000 coverage total as long as each person doesn't max out over that $10,000. If you chose $30,000, then it's $30,000 per person. There's also uninsured and underinsured motorists. So if you're not at fault in this accident and someone hits you, but they don't have enough coverage, you can kind of self-insure it where you're adding a small coverage that covers those cases. In that way, you don't have to go after the person or sue them. The insurance company will deal with it. They'll pay the bill up front, up to the limits that you pick, and then they'll go after the guy on their own. Normally, you're going to match your bodily injury. So if you carry the 100/300 or the 25/50, that's the same thing that you're going to carry for the uninsured motorist and underinsured motorist. So if they hit you, people in your car, same thing, $25,000 per person, $50,000 per accident, and that goes in case of they're not having enough coverage. That leads into underinsured motorist, which is covering the difference between it. So uninsured is the case where they have zero insurance. They're driving illegally or something happened and you got injured and they're just not covered. So that's covering your medical or people in your car's medical. The underinsured motorist is covering the difference. So let's say, for example, in Georgia, I believe the state minimum is 25 and 50, or Florida, it's 10 and 20. If somebody carried that state minimum and injured somebody in your car, they're going to get the $10,000 for people in your car. But if there's $18,000 worth of medical, yours is going to pick up that additional $8,000 as long as you carry those limits or higher, which the lowest you can do in that state would be 1020, in which case you'd be covered. Same scenario if you go higher limits, 100-300. If it goes 150,000 worth of medical, and I carry that 100-300 on underinsured motorists as well, I max out at 200,000. So as long as my per person doesn't go over that, then I'm okay. I do want to put a little asterisk there because some states like Florida, that'll double your price. So you've got to play with it a little bit and see what the costs are. Maybe you're doing the higher limits for other people and you lower that uninsured motorist for cost reasons. You can pick and choose the levels. They don't have to match exactly. Versus other states like Michigan, it almost doesn't cost anything because they've got some sort of medical, which we won't go over in this video. I'll actually link another video up here that goes over the Michigan one. But they've got something called personal injury protection, which can be unlimited in that state. So they've got tons of medical already. Having that underinsured motorist only benefits them when they're driving into a different state. So what about my car? Uninsured and underinsured property damage is identical. You can pick uninsured property damage. So if the guy hits you, has no insurance, that'll cover your car. And you can pick underinsured property damage, where if you have a nicer car, let's say it's a $60,000 vehicle, and you assume that a lot of people only carry the minimums, which is going to be $10,000 to $20,000 property damage. Well, there's a $40,000 gap between those two. You would want to carry the uninsured or underinsured property damage to protect your asset as well. Now that coverage, I would always recommend going high. Whatever the value of your car is, just max it out because usually the uninsured and underinsured property damage isn't more than a couple dollars per month. And then to tie in with the medical status, that's where it cuts off for most people. If you're in a state like Texas, Florida, Michigan, I believe New Jersey or Pennsylvania as well, there's a handful of states that have something called PIP. It's personal injury protection. Essentially, that's a medical coverage, and most of the states let you pick limits. So it's something that you're going to have to work in with your agent and find what's the best fit for you. But in most cases, the benefit, if you have the choice of choosing MedPay or PIP, then you're going to want to choose the PIP as long as the price isn't that expensive, because what that does is that works in not just medical coverage, because that's all MedPay does. The PIP also includes work loss, death benefits, things like that. There's other little packages that cover percentages of things that you could lose. And so if you can't work for 3 weeks because you're in a hospital and you're trying to recover, you get the medical and you get 80% of your wages up to a certain amount. So each state's different. I would recommend talking to an agent with that. Otherwise, I do go more in depth with some of these things. If you guys are interested in that, definitely subscribe for videos like that. So coverage for your car. Your vehicle is very important, and we talked about the uninsured property damage, even though that technically falls under the coverage for you. Your vehicle has two options. You can do comprehensive and collision. Comprehensive is what we call acts of God. It's theft, vandalism, hail damage, a tree falls on your car. If you hit an animal is the one unique time while you're driving. In most cases, the car is just sitting there. And the only time while it's really moving where it's going to be covered is if you hit an animal. That's why they say, when in doubt, take Bambi out. It's kind of a joke, but it's not, because if you're driving down the road and you see a deer and you have to swerve, you miss the deer and hit the guardrail. The deer is comprehensive. It's an animal. The guardrail is a collision, which we're going to get into next. So I'm not saying take Bambi out. I'm not saying crash at all. So try to avoid it if possible. But just know that if you do lose control and that's the situation, that's the type of coverages that you're going to get. So bringing it home, we've got collision. Collision is covering your vehicle. This is your car no matter what. If you get in an accident, you hit a car, you hit a house, whatever the collision piece is, you hit your garage. That's that part of it. It's what we call full coverage, because full coverage entails comprehensive and collision. They're kind of in order. So when you've got your bodily injury, your property damage, your uninsured, your underinsured, then you've got comprehensive and then collision. So when I say full coverage, I'm saying I want all of this stuff, just one package, and then you have to pick the limits that you want. So as we know, the price of insurance is also important because we've got to afford it. And at the end of the day, we don't want to pay for something that costs more than our car. It's not really worth it to us. So you've got to pick and choose which coverages are important to you. This is where deductibles come in. You've got your comprehensive deductible. Most commonly, it's going to match or be close to the collision deductible, which is $500 on most cases. Personally, I do about $100 on comprehensive, $500 on collision. Some people do $250 on comprehensive. Some people do $500 on comprehensive. You can typically go as high as $2,500. I don't usually see anybody go that high. In most cases, you won't go over $1,000 because the cost difference doesn't make any sense past that $1,000 deductible. It doesn't save you a whole lot more. And then your collision deductible, most commonly $500. Some people do $1,000 if they can bank that money and save up in case they have to out-of-pocket that. The reason we have deductibles is you're taking on a piece of the insurance. It's kind of like getting a loan from somebody and saying, well, I need a loan for $8,000, but I'll put up $2,000 on top of it so that I can only borrow $6,000. I'm good for the money. Here's $2,000 to kind of do like a commitment to that loan. Same thing with car insurance. You're saying, I commit to paying that $500 or that $1,000 in the case of an accident. In turn, I want you to lower my rate because I'm showing that I'm committed to not having claims. And those are the primary coverages that you have in car insurance. You've got coverage for others, coverage for you, and coverage for your vehicle. Now, when you're doing quotes with other companies, there's a couple things that you should know. To get the best rate, you're going to want to go through and learn some of the discounts. I'm going to put this video up here so you guys can watch that. And I'm also going to put another video here that's going to go over what coverages are most common. So we didn't go over what levels at what income you should carry coverage-wise. Definitely watch either of those videos. If you guys have questions, put them in the comments below. Otherwise, I'm Mark with Think Insurance. I will see you in the next one.